think the events last week mean for the stablecoin industry going forward?
There's going to be a lot of eyes on it, obviously. On the one hand, what collapsed here was something that was known to be dynamically unstable, right? This is the seigniorage model of stablecoins that Terra was the biggest of. Most of the other stablecoins out there, don't follow that model. They are collateralized. They actually either have collateral in an institution like in USDC or like Tether, or they have collateral on chain like MakerDAO, which has Ether or other coins collateralized, whereas Terra didn't, right? And I think this is certainly, if there was ever any doubt before, which there wasn't much, though Terra's rise kind of contradicted it. If there was ever any doubt before that these seigniorage-based stablecoins that Terra exemplified were unsafe, there's certainly no doubt now. So I think at the very least, I expect we shouldn't be tolerating or seeing any more of them unless there's much more rigorous analysis and culture of critique and so on. So I think the crux of it is we need a lot more transparency and evaluation of the security and stability of these systems. And that goes both for the centralized ones and the decentralized ones.
I think that the collapse of Terra Luna buries the idea of an unbacked stablecoin, of an algorithmic stablecoin. I think algorithmic stablecoins have been tried many times before in the cryptocurrency world, and they have more or less always failed, or they've always failed once they reach a certain scale. And so this collapse in particular was unusual only because it was large and because it had such prominent backers behind it. But I think that it essentially lays to rest this idea that you can have a stable coin that doesn't have real dollars or real euros behind it. Because at the end of the day, no matter what algorithmic mechanism you have or what mechanism you have, algorithmic or not, if you're not fully backed, the moment there's a run, the moment there's market panic, if you can't redeem the stable coins one-to-one with real fiat money, then no matter what mechanism you have, it's not going to work. And so I think that that's now clear. That's become a more or less a consensus view. I mean, I think people are still going to try and do weird things and experiments and so on, but at the end of the day, they're not going to work. When the panic sets in and people want to redeem their stable coins one-to-one, the only way to do that is if you're fully backed by the underlying currency. So I think that the consensus will move in that direction, and that we'll see fully backed stable coins essentially take most of the market share, and the other ones will be like weird experiments on the fringes, but no one will take them seriously.
Can we expect other stablecoins to fail, even those that are backed by assets but not fully collateralized?
It's certainly possible. I mean, all systems can fail, and especially there's financial instability and these liquidity crises where, which is kind of what we had with Terra. Terra was supposed to be supported by the liquidity of the Luna market, but you didn't even have the collateral to sell. You had to go get it, and then it wasn't like put up. You had to eat into the market, so it was even less secure. But it's certainly possible in any stable coin, depending on what their assets are, that they're not going to be liquid enough if there are large outflows. And we've certainly seen some, significant outflows in other stable coins. Interestingly, there's maybe a bit of a flight to safety going on from Terra to Tether, and then from Tether to USDC, and it's possible we'll see more of that. There's certainly a lot of question about about the liquidity of the assets that Tether is holding, and how those will hold up under continued outflows. So hopefully they're safe. I can't say much more than that, but you never know what the future has in store. You got to watch those outflows. It's these hot money movements that break these pegs essentially, and any of these systems can be broken. We see it over and over again in history, not just in crypto, but in the traditional financial system as well. And so there's a lot to learn about what it looks like to do this in a stable way.
So I think the main stable coins in the market do all claim to be fully collateralized. So Tether, although it has never produced a proper auditor report, it claims to be fully collateralized. USDC is also fully collateralized. So the question for me is, what's the quality of that collateral? In the case of USDC, I think they're quite transparent, and they publish very regularly what exactly their asset holdings are. So no one has any doubt that they'd be able to meet redemption requests in a market panic. In the case of Tether, it's much less clear because there is no transparency about what they're actually holding. Supposedly they have money market funds in China. There's speculation that they actually hold volatile cryptocurrencies like Bitcoin. No one really knows what they have. So they claim to be fully backed, but who knows? They redeemed, several $billions in stable coins. So people handed in the stable coins and received actual dollars in exchange. In the recent market panic, they met those redemptions with no issues, apparently. But we don't know. Again, this is a regulatory oversight. I mean, Tether shouldn't be able to simply not have total transparency and full disclosure about its asset holdings. I mean, we're talking about a stable coin with 60, 80 billion dollars in market value outstanding. This is not small potatoes. So we should know what's in there.
Will we see other death spirals in the stablecoin world and in the crypto world?
I mean, it's possible that for other seigniorage-based or so-called algorithmic stablecoins, we will see other death spirals. They seem certainly not unlikely, and we've seen them many times before, and we'll see them again. But the other, the top stablecoins don't have those kinds of dynamics, and they are actually collateralized, and at least to some extent, and they do have mechanisms for sort of safely unwinding. So I think it's unlikely we'll see the same level of death spiral. It's certainly possible that there could be liquidity crises, and it's certainly possible that some will fail. And I guess you could call that a certain kind of death spiral. But it's these dynamics of the death spiral aren't built in to other stablecoins the way they are into the seigniorage-based or algorithmic-based. So it's important to sort of separate that distinction.
I would say in general, I do think we may see more collapses and death spirals and so on, because again, it's a completely unregulated space and people are doing all kinds of crazy experimentation, advertising things as stable coins, even though they are not. So yeah, I think we could definitely see more so-called stable coins collapsing, especially if they're not fully backed one-to-one with fiat currencies in banks. I mean, there are a few stable coins that are over collateralized. So for every $1 in coins, there are $2 or $3 or $4 in other assets, except those other assets are volatile. They are cryptocurrencies. So there are some stable coins that are over collateralized, but with cryptocurrencies. And so if there's a market panic and crypto prices begin to fall, then that coin may not be over collateralized and may become under collateralized. And if the sort of central bank of that stable coin begins to sell its crypto holdings to meet redemption requests, that could further depress crypto prices, and you could have another stable coin going bust. So this is different than an algorithmic stable coin. This is an over collateralized coin, except the collateral is crypto. So it's conceptually different.
There's been talk about Terra and Luna that there was an attack versus investors just getting spooked. Does it really matter if it was an attack versus investors getting spooked if the ultimate result is that it lost its peg?
I think it matters. Like people attack these systems. Soros famously attacked the Bank of England, and we've seen other attacks like this sort of succeed or fail. But these are certainly the kinds of things we need to be resilient to. And I think part of the problem with Tether was with Terra was there was this blatant subsidization of UST creation through Anchor, right? Basically incentivizing very high yields. And that's like the classic story of how these pegs break. You get hot money chasing high yields.
No, I don't think it particularly matters if it was an attack or not. I mean, these speculative attacks on currencies are normal and they're to be expected. I mean, market participants are naturally profit maximizing. If they see a good trade, they're going to take it. So if that means shorting something that they think is going to collapse, they'll short it. And arguably, it even helps with price discovery. It helps weed out bad projects from good ones, bad companies from good ones, et cetera, et cetera. So if there was an attack, then I think it's essentially like morally neutral. I don't think there was market manipulation, or I've seen no evidence of that. So I don't think it matters if it was an attack or not.
Should people be looking at those companies that offer these high yields as potentially the next to fall?
Yeah, I mean, it depends where the yields come from. If they come from, treasuries that are running down and not replenishing fast enough, then yeah, and that was my understanding of what was going on with Ancor. A lot of yields are coming from, are coming from issuance, which is maybe a little bit different. There are certainly questions about the sustainability of yields and issuance, and the extent to which they'll come down. But I mean, the problem with Terra was, so there's this general problem of, everyone in DeFi is chasing yield, and whether that's okay or not, sort of remains to be seen, but that's finance for you. But with Terra, it was sort of bolting that on top of what was known to be, a quite unstable mechanism, essentially. And so, it was particularly bad in that scenario. And, I don't know that the yields are quite as high with other stable coins that you can get with Terra, and they're safer to begin with because, they generally have collateral. So, that it'll come down to what is the liquidity of that collateral in the end. And so far we've seen the sort of ether-backed systems, MakerDAO and systems like Rye now, which don't target the US dollar, which is a whole interesting subject, be somewhat resilient, quite resilient to ether drawdowns a couple of years ago in particular. And so, those systems are being tested and stressed as well. And a lot of them are holding up. It's actually quite impressive what has transpired with, let's say, blue chip DeFi engineering. And maybe, there was some agreement or consensus that Terra was blue chip, interestingly, but, it had this unstable thing at its heart. So, yeah.
Well, as they often say, if it sounds too good to be true, it is. Many of these very high yields are deceptive in a way because they're in the real economy, in the real world, the reason that companies can pay, for instance, high dividends is because they're very productive, because they add a lot of value to society, because there's a true economic use case beneath the business. There's a reason why society needs those goods and services, and society is willing to pay for them, and that can sustain a high dividend yield, interest payments, and so on. A cash flow that can sustain a cash flow that's paid out to investors. In the case of decentralized finance and crypto, it's not really clear what the real world use case is. It's not really clear what the value added is. So when these projects are advertising very high yields, you have to ask yourself, are these yields being paid out of economic value that's being created, or are these yields being paid out of other investors? Which is to say, am I looking at a real business or am I looking at a pyramid scheme?
How long do you expect the ripple effects of what happened last week to play out through the system? If a company is stable now, can we count on them to be stable in 6 months from now?
We don't know yet how systemic the sort of Terra collapse is going to be. It seems somewhat contained right now. Famous last words, but I'm not, watching Bloomberg screens all day, and so I'm not exactly sure what's going on in the markets. I think Tether might have a much larger risk of being integrated kind of more systemically, but even still, I would hope there's some isolation. Definitely, the regulators are concerned about this. Historically, they've had a hard time. There have been private USD stablecoins for like 60 years or something like this, right? We call it the Eurodollar system that operates offshore and outside the purview of the central banks, more or less. And it's very hard to regulate that stuff. And now we have sort of a new, crypto version of that, which are these stablecoins. And we'll see what happens with the regulation on them. But yeah,
I think one thing that will happen is valuations for companies that don't have products and don't have revenues are probably going to come down, and it's going to be more difficult to raise money for all of these super speculative ventures. And so things are going to slow down in terms of fundraising for a while at least. I don't know how long that while will be. Thankfully, crypto isn't really integrated with the real economy, because if it was, then the crash in crypto would have sort of had more serious effects to the broader economy. I do think some of the investors in crypto are some of the same investors in speculative growth equities in the US. Some of the companies that have fallen, 60, 70%. And so I do think that that specific part of US equity markets and crypto touch each other, but I don't think there are broader linkages than that, thankfully.
Do you think what happened in the past week, will that speed regulation of the stablecoin sector as well as the crypto industry in general?
I'm not an expert on regulation. I could certainly see it doing that. I think it's hard to say the U.S. government doesn't have the right to regulate calling yourself stable USD essentially. I think they'll certainly try. To some extent, it's necessary that we have standards and high levels of transparency and risk disclosure and these kinds of things. Obviously, there's a tendency when things are federally regulated for there to be very high barriers to entry. And it's not that all stablecoins are fundamentally unsound. These Seigniorage based or what people call algorithmic certainly seem to be, but it would be unfortunate to kill all innovation here. And there are certainly more sound ways to approach this. And one of the more interesting topics of conversation right now is how do we create non-USD pegged stablecoins. Stablecoins essentially pegged to themselves. This is the idea of Rye, which is a system running on Ethereum, similar to MakerDAO, but it's not pegged to the USD. It's pegged to itself, and it's using Ether as collateral, and is kind of have certainly a much more sound design. So it would be a shame to see things like that suddenly become regulated out of existence, because they do seem to provide value and to allow experimentation. And I think there are other directions where I'd rather see the focus of the crypto industry on this sort of stablecoin problem, especially in connecting into trade credit, where you have businesses denominating debts with each other, accounts receivable, accounts payable in a stable currency. It's not a currency per se, but there's a lot of interesting things we could potentially do by having access to the network of obligations in sort of the real economy. And so that's the direction I'm sort of hoping that stablecoins go in, that we can look more at credit clearing in the real economy rather than just a way to create digital USD that we can use to speculate and so on.
I don't know if it will speed up regulation. Governments have lots of priorities at the moment, and they have their hands tied up with other things. But I think it definitely should speed up regulation of the sector. I think it's become very, very easy to buy cryptocurrencies with applications like Coinbase and Binance and so on. And so a lot of people, particularly young people, particularly males, are quite into crypto. And I think consumer protections are like kind of severely lacking. The Coinbase app doesn't even tell you what your cost basis is. So you don't even know what your losses are. So retail investors actually don't even have a tally of how much fiat they put in for how much crypto and whether they lost money. So like even the most basic things just aren't there. And like I mentioned before, in terms of broader market structure, all kinds of conflicts of interests with exchanges, also being hedge funds, also being market makers, also being brokers, also being sort of public companies with their own tokens outstanding. I mean, the conflicts of interest are everywhere. So I do think the space needs more regulation, definitely. And I think it would be good for the space too. I don't think it would be bad for the space. I think that good regulation would weed out the Ponzi's and the projects that have zero economic value added, and would give space for the other things that might actually potentially do some good. So, there's a lot of buzz in crypto about remittances getting cheaper. I mean, Maybe if people funded fewer Ponzi's and more people that are trying to do remittances, maybe that would actually happen.
Do you think that investors are more skeptical given what's happened? And is that a good thing?
These are very strange new monetary technologies. And what they emphasize is that, money is in some sense a governance project, and by having the power to create these new kinds of money, these cryptocurrencies, it's a great power, and it comes with a lot of responsibility, but it's allowing these new kinds of technology communities to form, sort of permissionlessly over the internet to create these, powerful new systems. And it could all it could all fail. Everyone could suddenly stop believing in it. Maybe there's fundamental bugs in the cryptography that we somehow missed. But it's a question on what kind of communities you want to bet on, essentially. And amidst all this uncertainty in the world at large, not just in crypto, that's sort of the question you always have to ask yourself is, who and what kinds of systems do you want to bet on?
I don't know if investors are more skeptical, but I definitely think they should be. I mean, some of crypto prices have just collapsed spectacularly. Like Bitcoin and Ethereum are down, I don't know, 50% since the highs. But some of the so-called altcoins, these lesser known coins and tokens for decentralized finance protocols and other things, some of those are down, 80, 90, 95%. So I think a lot of people will have gotten their hands burned and will be more skeptical going forward. However, the space does tend to have a very short memory, and the get rich quick allure is very powerful. So the narrative right now is very doom and gloom, but in 6 months, who knows what the narrative will be.